Hello dear students, welcome to Devika's Commerce and Management Academy. Today we'll see profit prior to incorporation chapter. I know many of you are waiting. Many of commerce students, maybe BCom students, they are having an advanced accountancy syllabus. This is one of the chapter, and others you may be having as per your course like CS, CMA, CS or in any other course, as per the syllabus. Profit prior to incorporation. This is one of the important chapter. So in detail we are going to learn very is the damn easy subject and easily you can learn this. Okay, just focus for some period. Profit prior to incorporation. It means whenever a company is purchasing another company, acquiring another company, taking over another company, that period we are going to prepare this profit prior to incorporation. Through an example you can understand very easily. We are purchasing one company. When we are purchasing on 1st April 2022, we are purchasing. When you are purchasing, immediately registration is not going to happen. Immediately you cannot register. Registration is on this date, 1/7/22. It means that we can say it as incorporated, company incorporated. Ours is XYZ company. XYZ company. We are purchasing a company. Purchasing a company. Ours is XYZ company. So when we are purchasing on this date, but incorporation is on 1st July 22. 1st July 22. Okay. And what is the year ending? Assuming that financial year. Year ending is 31st March 2023. Okay, these dates remember. From purchase date to incorporated. Purchase date to incorporated means after the purchasing until it get registered till this period, this 3 months we say it as a pre-incorporated period before registration. Purchased but before registration. This period, how many months are there? April, May, June. Okay, 3 months. 3 months I have written. This 3 months we say it as a pre-incorporated period. During this pre-incorporated period, if we get a profit or loss, that we say it as a profit or loss for pre-incorporated period. Are you getting it? Pre-incorporated. Now once if it is incorporated, means once if it is registered, then till the end of the financial year. If it is a calendar year, financial, whatever it may be, assuming that it's a financial year, means incorporated on July 1st. July 1st to 31st March of next year. How many months are there? Here 6 months in this year, next year 3 months. Total it is 9 months. This is pre and this is post. This period after incorporated to year ending, this 9 months we say it as a post incorporated period. Say along with me, post incorporated period. This period, if you get a profit or loss, that we say it as a profit or loss for incorporated, post incorporated period. Pre incorporated period, post incorporated period. If you understand this, we can go ahead. Now in profit prior to incorporation, in this chapter we are going to prepare profit or loss account mainly to know the profit or loss. Two types of profit will come to know. One is during this pre-incorporated period profit or loss. Second one is during the post-incorporated period profit or loss. These two we are going to calculate through the profit and loss account. Before registration, after registration. Are you getting it? So that is why here we are going to calculate the profit or loss. That is why we say it as a profit prior to incorporation. Profit prior to incorporation. Now what is the definition? Simple 2 lines you remember. First thing is that profit prior to incorporation, it refers to the income or loss received from the business during the incorporation period. During the incorporation period. This incorporation period is 2 periods. Pre-incorporation period, post-incorporation period. During these 2 periods, we will come to know profit or loss of the organization. Pre-incorporated period, this one. Post-incorporated period, this one. Once again read it. It refers to the income or loss received from the business during the incorporation period. Incorporation means pre and post. Okay, another important thing, remember, this is applicable for taking over existing business. Existing business is here A. Sorry, this one is existing business. We are taking over another business, A's company. A's business we are taking over. This is related to this only. We prepare only one time. When we are acquiring, when we are taking over this A's business, A's company, only at that period only we will be preparing profit prior to incorporation. Not throughout the year, every year we don't. We don't prepare every year, only one time only. When we are acquiring or taking over the company, only that period only. Okay, one time only. Now when we have to prepare the profit and loss account, simple profit and loss account, we know in final accounts we have learned profit and loss account. It starts with credit side gross profit, debit side what do you write? All indirect expenses, credit side income. Same profit and loss account we are going to prepare. Now in profit and loss account we write all the indirect expenses, right? So this indirect expenses, how do we allocate that? So this is main important concept you have to remember. Just focus for 5 minutes, you will understand everything. How do we allocate the expenses, indirect expenses in the profit and loss account of this? So that we can say it as allocation of expenses. How do we allocate? 4 points you remember. One is time basis. On time basis we allocate the expenses. On sales basis, pre and post. Some expenses not based on time or sales. We just directly post it into the pre and post. Pre column will be there, post column will be there. There we are going to post it directly few expenses. Those expenses we'll talk later. Right now we'll focus on the on time basis. What kind of expenses we will consider? What kind of expense? Time basis means according to the time. Sales basis, the expenses which are related to the sales. The expenses are directly or indirectly related to the sales. Those expenses we say it as a sales basis. Time basis expenses means generally it is fixed, like electricity, some expenses we have to pay. So what kind of expenses? That list is given to you. You need to literally remember or literally you have to by heart. Then only this chapter you will be understanding. And how to remember it also I'll tell you. See, time basis means it is fixed. General expenses, all kind of expenses, except sales basis. Sales means you know. So when you are selling, some expenses which are related to the sales. Apart from that, almost all the expenses it comes under the time basis only. On time basis, these are the expenses. One is rent, rates and taxes. Every time you have to pay the rent, time basis. Rates and taxes also. Depreciation also every year we calculate on time basis. That is why it comes under time basis. And salaries to general staff. Salaries to salesmen will be under the sales basis. Say where it is. Say salaries to salesmen. Yeah, here. Salaries to salesmen. This is salaries to general staff, office staff. That is time basis. Every year, every month you have to pay, na? So that is what time basis. And insurance also you have to pay. Repairs and electricity according to time, whenever required you will be going for this. Audit fee also yearly or periodically, whatever may be the auditing work, according to that you have to pay audit fee. General expenses, or you can say sundry expenses. We use both the words, both the vocabulary. Okay, general expenses or sundry expenses, that also time basis. Printing and stationery, these are all general. Office expenses, fixed expenses, miscellaneous expenses, administrative expenses, general traveling expenses, general traveling. If it is sales traveling means it comes under the sales, general traveling, okay. And in the same way, bank charges, telephone. These are all the charges based on the, these are all the expenses based on the time basis. Now when it comes to sales basis, only sales related. The expenses which are related to the selling of the goods, sales basis. Gross profit, mainly remember, important point. Gross profit always based on the sales. Important point, remember. Gross profit means on basis of sales. Gross profit, how do you got? From the trading account. In trading account, you found sales, right? That is why gross profit is on the basis of sales. And bad debts, discount allowed, all these things are related to sales only. When you are selling goods, there is a chance of bad debts loss, so bad debts comes over there. Discount allowed, discount also when you are selling the goods, then only you are allowing discount. And carriage outwards, outside you are transporting the goods. Okay, the selling expenses, salesman's commission. If you read this, you will understand these are related to the sales only. Sales, selling expenses, salesman commission, advertisement expenses, delivery expenses. Means when you have to deliver the goods from the company to customer, those are related to the sales only. So it comes under that. Delivery expenses, free samples also expenses for the company for selling the goods or for increasing the sales, right? After sales, service cost. After sales, some service cost you have to bear, that is also. And the salaries to salesman, salaries to general staff there, salaries to salesman, here salesman means related to sales. And sales promotion expenses, variable distribution expenses, distribution means sales related, na? In the same way, traveling expenses, general traveling expenses. So these are all sales basis. Apart from time basis, sales basis, you have to remember few transactions you have to post it directly in pre. Pre means this period, pre. Post is this. What are those expenses comes under pre period? Only two. Partner salary, able to remember? Partner salary and interest on partner capital. Interest on partner capital and partner salary. Only these two will write it, if it is given, we'll write it under post, pre column. And under post column, what are the expenses? Mainly related to the company. These expenses are directly related to the company. Example, director fee, salary, the company high level, na? So director fee or director salary, director traveling, salesman traveling is here, general traveling is there, and director traveling is comes under the post. Okay, post means related to the company. Formation expenses, preliminary expenses, preliminary, while acquiring the company, there you have to spend something, so that is preliminary expenses, formation expenses. And dividend on shares, company has to pay the dividend. And interest is also on debentures. Dividend on shares, interest on debentures, these two are company has to pay, that is why it comes under the post. Okay. And MD remuneration, managing director remuneration, underwriter commission, underwriters, you know, okay, who gives the guarantee to the shares for purchasing the shares, for them will be giving the commission. So who has to pay? Company. So these are related directly to the company. Underwriters commission, share transfer fee, you wanted to transfer these shares into another category, then you have to pay some fee, that is also. So these are all the expenses which comes directly on the post column. Pre column only two. Are you clear about this? Time basis, sales basis, pre and post. If you will be able to remember this and if you understood this concept, very easy. Profit prior to incorporation. Next class, we'll start working out the problems. Very easy. I'm telling you now. So just stay connected. By the way, advanced accounting and many more subjects already I prepared many concepts. You can check out the playlist or in the comment box or description box, somewhere you'll find the links. So don't forget to share these videos. Study well, have a bright career. Next class we'll work out the problem. Good luck.